Hello and welcome to a brand new show of Market Makers Contra Call. My guest on the show today believes in one simple philosophy. Price is what you pay, value is what you get. Good old Raamdeo Agrawal of Motilal Oswal Financials. Raamdeo, what a delight to have you on the show. Thank you for joining us. The theme of the show is all about contra investing.
Yeah.
So define contra investing for us.
The way I understand is that what is not a popular stock or the stock which doesn't is a popular opinion is what is called contrarian kind of view. So if you buy something which is absolutely unpopular, beaten, I mean you hate to look at that particular stock, that's the kind of stock you should, I mean if you buy and invest in them and make money, because most of the money is made in this kind of stock when the perception changes. Perception is the driver of P. So the earnings is wherever it is, but if the perception of the stock is negative and depressed, and from there it changes to more positive or optimistic and then euphoric. So that change in the P multiple from say 10 to 100, that makes you a lot of money.
So what's been your experience? Has contra investing worked for you?
Actually, I'm not a contra investing type, in the sense that so far I have not bought into one or two situations I have bought in the past and have been very successful in those ideas. Like one stock I remember which I bought way back 5-6 years back, Calcutta Electric CESC, at about 13 bucks. So the whole company was available at about 90 crores, monopoly into Calcutta, improving transmission and profitability, and then they were heavily leveraged and the interest rate fell from 13-14% to more like 6-7% for the I mean the whole interest table. So we did a ratio called interest cost to market cap, and it turned out that interest was 3 times or 4 times more than the total market cap, and hence the impact of the interest rate decline would have been maximum on Calcutta Electric. So but then people told me, those who were around me from Calcutta only, they said it looks worse than BMC office and don't look at it, you can't even stand there. I said that's why it is at 13 bucks.
So what prompted you to buy that stock?
I said, I mean I had a very bullish view on changing the value of a stock once the interest rate declines, and we had seen major decline in the interest rate. So I was wanting to buy something which is getting hurt because of the high interest rate scenario at that point of time, and will be significant beneficiary, because Calcutta Electric business was very stable and it actually had a very good reputation in Calcutta under RPG management. But yet the profitability, net profit after tax, was low because it was heavily leveraged, and West Bengal government was disputing about giving what all costs are allowed to be passed on. So as the interest rate came down, the profits which were very, very marginal or into loss, that shot up to 4, 5, 6 times, because all the interest became benefits to the company, and then the stock flew from 13-14 bucks to more like 150 in 2 years time, and then I sold at about 120 or so, and then we saw stock going to 400-500, and rest of the story.
Is there a difference in contra investing and value investing?
Yeah, I mean when you say contra investing, it is a way to reach a deep value situations. It's a way to deep value situations, but I would say value investing is much bigger set of it. You can have a value in growth also. You can have value in a very popular situation also. But contra, to my sense, is clearly is a way to get to very deep value situations, and you need a lot of courage and complementary skills to exercise in those kind of situations when you want to buy. Like as I said, Calcutta Electric was a very simple situation. It was an utility, well-known utility, monopoly into the city, generation as well as distribution. So a lot of things were happening for the company. It was very simple business. I didn't have to go and meet the management and all. So, but generally, to gather courage and buy into those situations, you need good complementary skills, because you know that this is going to turn like this, and hence you would like to position your bet, and when that thing actually turns around and perception changes, you make money.
Do PSU banks now qualify as good stroke contra bets?
I would not call it very deep contra, but it is definitely contrarian, particularly in the high interest rate scenario, and some scandalous kind of thing which has happened because of 1 or 2 incidences here. So those things have hurt the image of public sector banks, and somehow the profits have been very good, operations have been very good, asset levels have been clean, but I think dynamism of private sector, so-called, so that's somewhat missing. But banking is very simple. They have tremendous franchise, they have network, branches running through the pan-India. They have unwritten free sovereign guarantee. You walk into any bank, you're getting sovereign guarantee without paying anything for that, so which is very, very valuable. You walk into the smallest possible bank like Dena Bank or Punjab Sind Bank or some other Vijaya Bank and all, or you go to SBI, I think your deposit per se is safe. So that's one aspect of it. And third is that they have limited competition with 70%, 72% market share, and banking license is not coming through for last 10-15 years. Economy has gone up from a $250 billion economy at turn of the century to now we are at $2 trillion. So 8 times of the economy, and you're not given one single license. And I don't think even if you give license today, for next 5-10 years it cannot make much impact. So I think broadly it's a very less competitive kind of scenario, and hence all these banks should do well.
So central bank growth stock contra idea?
Yeah, I mean, see, when your money supply is growing at 15%, 17%, so you have a secular underlying growth rates for the industry and business of about 15 to 20%. And if there is any other metrics in terms of cost reduction or mix change in terms of your deposits or mix change in terms of your advances, and hence rota change of from 40-50 bips to more like 100, 110, 120 bips, I think you can see on a 15% volume growth, if your profitability goes up by another 100 or 150%, you can see kind of 2 to 3 times of profit expansion, 3 times profit expansion in 5 years time, and you buy at 5-6 P multiple. I think if that happens, you'll at least get a 5-6 exit P multiple. So you can make your money at least 3 times in 5 years, and downside is limited. You're buying at price to book 1. Your bank franchise, sovereign guarantee, growth, all the real estate they have at book value, they're all free. When will the opinion of the market change? That we don't have any idea.